The Fed is set to end quantitative tightening in 2 days. What will happen as the liquidity starts to surge into the markets? And one economist is saying that the Fed will have to return to QE sooner than expected. And you won't believe what BlackRock is saying about its Bitcoin ETF for its business. And Coinbase has done something very unique with stablecoins and universal basic income in New York. Could this be the future model as AI and robotics take away jobs? I'll give you the details. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, let's take a look at Bitcoin right now, just over $90,000. So the grind continues. Bitcoin, of course, moving away from the oversold zone. But, as we mentioned in yesterday's podcast, we're seeing the S&P 500 and the other stock market indexes start to recover. So what we want to watch for is this week, will the S&P 500 break to new all-time highs, or will it get stopped out? Because if it breaks to new all-time highs, that's going to be a very bullish sign for the crypto market, because we know it's all correlated to global liquidity. But there are your leaders and laggards, and right now crypto is a big laggard because silver, as we highlighted in yesterday's podcast, is hitting new all-time highs. So that's confirmation the macro bull market is not over, and gold is starting to rebound, but we're waiting to see, will it break new all-time highs? So similar to the stock market, we're waiting to see what happens here, because these will be very positive signs. Now, when you look at the RSI for gold, there's still room for it to run here. It was moving away. It didn't really go to the oversold zone, but it's moving away from that region, and it has not hit the overbought zone yet. So again, let's watch this closely. The same thing can be said for the stock market. It is not in the overbought zone, and it has been moving away from the oversold zone. So there's room for upside here. So this is going to be a very important week, I think, to see how the market starts to react. And could Monday, where the Fed ends quantitative tightening, and remember, we got confirmation of this earlier in November that they are going to do this. Jerome Powell did confirm it. They're going to end quantitative tightening. So that means they're going to start purchasing securities and loading up their balance sheet once again. And the other factor is, folks, they will continue to cut rates, because right now the Fed futures on the CME has an 86.4% chance they're going to cut rates by a quarter point, 25 basis points in December. So you have the ending of quantitative tightening, you have rates dropping, so more liquidity is going to come in, more people will be able to borrow capital at a cheaper rate, obviously. So the next FOMC meeting is in 10 days. So this is a very big December, folks. So let's see what happens, how the markets react. And I want to highlight something from one economist. His name is EJ Antonio, PhD. He said the Federal Reserve has managed to push up bank reserves for 4 weeks now, but they're running out of tools in the toolbox and will soon have to resume asset purchases, euphemistically called QE, or quantitative easing, i.e. money printing. One financial planner replied to that tweet saying, assets on the balance sheet have decreased while GDP has steadily increased. Let the buying begin. Liquidity is coming. So we all know, guys, we've seen this time and time again. If they are printing money and injecting liquidity, the asset prices are going to go bonkers. And as rates decrease, people are going to move. It's going to be risk on, essentially, even more risk on than we've seen so far, because you're not going to get the same interest or yield from money market funds and things like that. So people are going to go to risk assets, right? So this is the thesis, the macro thesis that I'm personally looking at for the continuation of the bull market, despite the short-term volatility, some of the bearishness we're seeing on the charts, right? I'm not ignoring that. I'm just saying the macro here is setting up for a move for higher highs in this bull market. And look, there will be a blow off top. I don't know what the catalyst will be, but there will be. And maybe it's some sort of recession. I think we're already in some sort of recession right now, but you look at the unemployment and you look at the layoffs and so forth, they're starting to creep up to near recession levels, not at recession levels yet, but near. So I think we're at the start of it. So let's see what the Fed does here, folks. it's going to be, like I said, a very interesting and big December. And let's see how the markets react. Now, I don't expect crypto to just pump to new all-time highs in December. We don't have enough time for that, right? But could we start seeing the upward momentum, and we build the momentum when we enter into next year, Q1 2026, and we start seeing fireworks, right? That is what I'm thinking about. That's my thesis. Obviously, I don't have a crystal ball. Obviously, that's not guaranteed. But as investors, we want to look at all these different factors, the charts, the macro, and the on-chain data, of course. So get ready for Monday with the end of quantitative tightening and then the next FOMC meeting with the rate cuts. Now, look at this news, folks. BlackRock says Bitcoin ETFs are its top source of revenue. This is very surprising. This is coming from an executive at BlackRock, and I didn't expect the ETFs to be their top source. This is very bullish for crypto because BlackRock's going to continue to double down and build different products, and they're not going to want to see the prices drop much if they're making this amount of money from it, right? So BlackRock's Bitcoin ETFs have become the firm's top revenue source with allocations nearing $100 billion, a surprise given the firm's 1,400 ETFs and $13.4 trillion in assets under management. Now, remember, this is the world's largest asset manager. So the fact that the Bitcoin ETFs are driving the most revenue is pretty surprising. And it's why Larry Fink, he's bullish and he's been going on TV talking about it all for the past 2 years, right, since the launch. So the US spot Bitcoin ETF IBIT launched in January 2024 reached $70 billion in assets in 341 days and has generated an estimated $245 million in annual fees. IBIT now holds over 3% of Bitcoin's total supply, and BlackRock's own Strategic Income Opportunities portfolio has increased its stake in IBIT by 14%, betting on the ETF's continued growth. Read between the lines there, right? They're betting that this continues to grow. What do you need as far as the ability to market this and for it to grow? The price to go up, right? Read between the lines. They're taking this ETF and putting it into their other products to help those products to, have the proper returns or greater returns, right? So they're going to want to see the price go up. They're going to continue to double down. And as we covered in yesterday's podcast, after weeks of outflows, they're now inflows. So they're buying the dip. So this is why I'm looking at all these things. I'm sitting back and just looking at the lay of the land here, and I'm seeing the macro setup. I'm looking at what BlackRock's doing and thinking this thing cannot be over yet. Now, is there a probability that it is? Of course, right? Like I said, I don't have a crystal ball, but I'm looking at the facts here. And as an investor, just looking at all the situations and all the scenarios and placing my bet. Now, from a macro perspective, let's say even if the market did top, right? From a macro perspective, as long as central banks keep printing, I've told you guys, I'm bullish. So even if I have to wait another year or another 2 years, whatever, for Bitcoin and alts to start moving, that's fine because I know this is the fastest horse in the race. It has been for many years. And despite the short term, very short term volatility and pullback and pain, I'm still macro bullish, folks. So that is my conviction. Now, you don't have to follow me. I'm just sharing my thoughts and the thesis here. And you can say, Tony, you're wrong. And I always tell you guys, leave your comments in the comment section, be professional, be respectful, and just say, hey, here's why I think you're wrong, Tony. List your reasons, right? I think we can have a good dialogue there and share our thoughts. I don't claim to know everything, but I'm pointing you guys to facts, right? What the Fed is doing, what's coming up, all these different things. The other thing I've been saying for a long time, the crypto market structure bill, that is a huge milestone. And I don't think market makers are that dumb to let that milestone pass and not use it to their advantage, right? BlackRock and all these guys not use it to their advantage in a sense of buy the rumor, sell the news. You pump the markets, crypto legislation's here, you're going to see this and that and blah, blah, blah. And then usually when it passes, that's when the market starts to roll over. We saw it with the launch of the Bitcoin ETFs. So look, I don't make the rules, guys. This is just how markets work. So once you understand these principles, it allows you to see the market differently, not to be, for example, an outsider, but to have maybe more of the insider view. How are the smart money folks thinking about this? So Again, just sharing my thoughts. I would love to hear what you guys have to say about this. Now, folks, this episode is brought to you by Uphold, which is one of the top crypto platforms out there. You can buy, sell, trade, and stake crypto assets on Uphold. They have 300 plus crypto assets. They offer staking on 20 plus cryptocurrencies. I've been a user of Uphold for many years, since 2018. They're one of my go-to exchanges. I've never had any issues or any problems. They're very reliable. And best of all, they are 100% reserved. They don't commingle or lend out your crypto assets. You can review their transparency report on their website. And they offer a great rewards program where you can earn up to 5.25% on stablecoins. And the stablecoins they support includes USBC. You earn up to 5.25% there. Ripple's RLUSD, you earn 5% there, and Circle's USDC, you earn 2% there. And I vetted this platform. I've interviewed the CEO, so they're doing this the right way. There's no shady business here. And in order to participate, you simply have to open the app once per month, deposit $50 once per month, and trade $50 once per month. Very simple and straightforward. So if you have a dollar cost averaging strategy, you simply use Uphold and you can earn the rewards, right? So that's really great. And part of the rewards program, you get 24-hour early access to new tokens they list. So check it out, folks. Uphold, great platform. Once again, I've been a long time user. So if you'd like to learn more, visit the link in the description. Now, folks, look at this news. Nasdaq crypto chief pledges to move as fast as we can on tokenized stocks. A couple things to peel back here from the onion. First up, the Nasdaq, a stock exchange, now has a crypto chief. All of these TradFi firms now have a designated crypto team. They sometimes call it digital assets team, but it's crypto blockchain, right? That in itself is amazing. But second, notice the urgency to start tokenizing stocks, right? They're going to use blockchains, obviously, public blockchains, and they're putting gold, stocks, equities, money market funds, all these things on the blockchain, which is incredible. So the US Nasdaq Stock Exchange is making SEC approval of its proposal to offer tokenized versions of stocks listed on the exchange a top priority. According to the exchange's crypto chief, here's a quote: "We'll just move as fast as we can," Nasdaq's head of digital asset strategy, Matt Savarese, said during a CNBC interview on Thursday when asked whether the SEC could approve the proposal this year. He continues here saying, "I think we have to really evaluate where the public comments come back in and then answer and respond to the SEC's questions as they come through," Savarese said. "We hope to kind of work with them as quickly as possible." So once again, there's urgency here. There's a big race. All these firms and stock exchanges are looking to tokenize these assets because they know it's going to unlock a lot of liquidity, instant settlement, make things more efficient. I've said for many years, I mean, going back to like 2018, 2019, we are headed to the token economy, 24/7, 365-day markets, no more opening and closing bell, no more holidays and weekends and whatever else, right? That will become a thing of the past. And it's almost hard to believe, right? Because the modern world as we know it, for the most part, has been the stock market opening, closing bell, and all that stuff, right? That's going to become history, folks. It's not going to be relevant anymore because all these things will be trading on the blockchain. Okay, moving ahead, Ethereum has a massive upgrade coming this week. The Fusaka is coming December 3rd. Ethereum's next major upgrade shows that the network can grow to meet global demand without compromising on decentralization or permissionlessness. Whether you're a user, builder, institution, or operator, here's how Fusaka will help impact you. So they go into this full breakdown. I just want to let you guys know this is coming. So this could be a big narrative for Ethereum as maybe we start to see some altcoins moving. So let's see what happens. It comes the week as the Fed is wrapping up QT on Monday. So again, some big things on the horizon here. And, you know, one of the things we've talked about is we need to see Ethereum break into price discovery, hit new all-time highs, and generally altcoins follow that move. I don't make the rules. This is just what we've seen historically. There are a lot of altcoins that are layer twos on Ethereum. So again, it makes sense that ETH is leading. It's the second coin behind Bitcoin. It's the top altcoin, so to speak. So we want to watch Ethereum And remember, the liquidity flows from Bitcoin down to ETH and then to the other altcoins and the rotation, small caps, mid caps, large caps, all that, right? We've talked a lot about that. I've covered that in my newsletter and much more. So this should be a big narrative for Ethereum. So let's see how it goes this week. Hopefully, no delays. Now, folks, this is interesting. We've often talked about UBI, Universal Basic Income, and the potential for stablecoins or CBDCs to be used to send money to people. I think that's in the cards for the future, that governments will use this technology to send people their stimulus payments, their tax payments, and whatever else. And because people are going to have, wallets and possibly wallets from the government, I don't think that's going to happen here in the United States, but in different parts of the world, or they're going to have wallets from banks. Like, so if they're banking with JP Morgan, Bank of America, they're going to have wallets. Those wallets are going to be approved by the bank and which subsequently will be approved by the Fed, right? So because the banks are all tied into the Treasury and Fed. So here's an article saying some New Yorkers are getting $12,000 in crypto in a Coinbase funded basic income style pilot program. This is interesting when you think about the politics, and I don't want to get too much into the politics, but like Mamdani winning the mayoral race in New York City. Now, put him aside, right? And even some of the politics with AI and humanoid robots on the horizon, a lot of jobs are going to be eliminated, and governments are going to have to give people universal basic income. I'm not saying I'm a fan of that. I'm not saying I want that to happen. I'm just talking reality here. And what better way to be able to do that is with this technology where it's transparent, you can trust it, right? The wallet setup. The only thing we got to watch out for if there's programmability about it, where it's tracking you and you can only spend it at certain places. That is a whole other conversation. But the point is the technology is here for them to do that. And it's funny how these things are all lining up here for what is down the road. So Give Directly is funding the pilot program with crypto donated by Coinbase. Participants will receive $800 monthly no strings attached payment and an $8,000 lump sum. Apparently, some of this was done already where people received the USDC stablecoin. They got $800 a month in USDC in September. And it says the program ends in February. There's a lot to unpack here, right? Because there's the political aspect, there's the capitalism versus socialism aspect. But again, I'm just straight out shooting some facts. I'm not saying I want this, so please don't come after me as the messenger, right? I know these things can trigger people, but I'm just letting you understand what's happening and how this technology will be applied and governments will use them. I've said many times, the future markets, economy, and governments will all be running on blockchain rails, right? I've said that ad nauseum. It's coming, folks. And they will use it to solve some of the problems that we're going to face with, AI and robotics and the economy and jobs. So the program is similar to the guaranteed basic income experiments flourishing around the US and the world. In such programs, a government distributes no strings attached payments over a period of time to a targeted group of residents. Guaranteed basic income programs often require participants to meet a specific criteria, such as a household income that falls near the poverty line. They differ from a universal basic income, which offers monthly payments to entire populations regardless of socioeconomic status. Again, there's a whole other conversation to have here, but look at the technology they're using, right? And Coinbase, I think they're just trying to position themselves to get used at their platform, the stablecoin they back USDC. I think other stablecoins will be used as well. But we could see in the future, for example, Trump wants to do the tariff stimulus check, right? If the government says, hey, those of you who want to get your stimulus payment via stable coins or whatever, download this app or use this app from this bank. It could be as simple as that. Now, those who are tech savvy will be able to do it, but then there may be people who are not going to be tech savvy, who may be older and much more. They may get it via check in the mail or direct deposit, whatever, right? But don't be surprised if these things start popping up and you're like, whoa, wait, that's what we're doing now, right? It's coming, folks. So you're starting to see the breadcrumbs here. Moving ahead, folks, we got some interesting news out of El Salvador. So, crypto payments firm Truther to launch non-custodial USDT Visa card in El Salvador. So, the launch will happen on January 29th, allowing users to spend USDT directly from their self-custody wallets via partnership with Visa. The card doesn't require preloading of funds or custodial services and carries a 2% fee on currency conversions, with no IOF tax for Brazilian users. Truther plans to expand its services to other countries, including Argentina, Mexico, Colombia, and Russia, and will integrate more local stablecoins into its self-custody wallet by early 2025. Wow, guys, you see the infrastructure being built here for the mass adoption of crypto, and it may start with stablecoins and help people to understand wallets and seed phrases and security, and make them even more comfortable to come into the crypto market. Those who are out, are still on the fence. Final news item: TrustLinq launches Swiss regulated crypto to fiat payment platform to boost cryptocurrency adoption. Incredible. So, TrustLinq, a Swiss regulated crypto to fiat payment intermediary, announced the launch of its pioneering crypto to fiat payment platform that enables cryptocurrency holders to send fiat payments directly from crypto holdings to anyone, anywhere in the world in over 70 local currencies. The platform, underpinned by Swiss oversight, bank level compliance, and secure automation, enables direct crypto to fiat seamlessly and executes payments via local payment rails or through TrustLink's debit cards. Apparently, the debit cards are coming in Q1 2026. Guys, you see why I'm so bullish? The building, the setup, what the governments are doing, what the Wall Street TradFi financial institutions are doing, and much more. Even crypto native firms building incredible technology and on and off ramps, the infrastructure being set up for people to use blockchain tech. It's incredible. Let me know what you think about this news. Leave your thoughts and comments below. Hit the thumbs up button. A great way to support the podcast is by subscribing to my free email newsletter. It is 100% free. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital. And my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. And folks, right now we have a Black Friday, Cyber Monday deal going on, where you can get 40% off. The fee for the lifetime access is a one-time fee. Use the code THINK at checkout. That is capital THINK. THINK. That's the code to get the 40% off. So this is a, once again, comprehensive course. It is packed with tons of value to help you understand the different aspects of crypto. So check it out. Go to mycryptocourse.com. Use the code THINK. Folks, thank you for tuning in. I appreciate you all, and I'll talk to you all later.